Good day, everyone. Today we're going to talk about one of the hot topic in the financial markets today, and that is the fate of the Philippine peso against the US dollar. As you can see in my chart here, the peso has been on a decline since the beginning of last year, which is just carried over from the last quarter of last year. So currently, the peso closed at 56.82 Friday of last week. And the question is, what's going to happen next over the next 3 months, 6 months, or even a year? What could happen to the Philippine peso? Because this is going to affect some of businesses and even lives of our fellow Filipinos, especially those who are dependent on the movement of the peso dollar exchange rate. So we are going to attempt to analyze and provide a forecast on the peso dollar exchange rate using the two conventional market analysis approach, fundamental analysis and technical analysis. By fundamental, we use the conventions of macroeconomic analysis, and we also consider events and some market behaviors, particularly peso dollar exchange rates, cyclical flow, into the Philippine shores. So, why is it that the peso has been depreciating against the US dollar? It is not the peso actually depreciating, but more of the dollar appreciating due to interest rates. Okay, so interest rates in the U.S. has been in an upswing since the beginning of this year. So the beginning of this year, the Fed has been actively increasing interest rates, and they have done about 2.25% increase since January of this year. And primarily, that is used to combat inflation, which is also at its record high. So this results to dollar being attractive as a currency, apart from it being a safe haven currency in times of crisis. The dollar is the go-to currency, when there would be uncertainties in the market. And as you all know, by February of this year, Russia has invaded, Ukraine. And that also drove the oil prices to its highest level at about $130 per barrel this year. And that somehow prompted, oil users to stock up on US dollars, apart from, of course, US dollars providing better yields, apart from it being a safe haven. So these two factors primarily actually fueled, the dollar appreciation. Well, but then before that, the equity markets also started going down, after multi-year, rallies. And essentially, it has shifted, the capital from the equities market towards the currency market. However, since in the Philippines, locally, we are already on the bear months, and we are expecting more dollar inflows from our OFW compatriots. Okay, we are somehow expecting that the weakness of the peso against the US dollar is going to be abated slightly, and we are going to see some of that indicator and behavior in the ensuing pages using chart analysis. So this time we are going to look the other side of the analysis, which is technical, using charts, indicators, and behaviors, of price action that will give us, somehow a hint of what could possibly happen. So looking at the monthly chart of peso dollar exchange rate for us to be able to see what happened in the early 2000, wherein the dollar had recorded somehow an all-time low of about $56. But unknown to many, by about 2001, there had been a fluke, a low that was registered at about 57.25. I believe this was during the EDSA 2 revolution that ousted the Arab and catapulted President GMA to Malacanang. So that being said, considering that past event, we can see that the current high is at its resistance. So by resistance, we mean there would be potential surface of sellers, or profit takers in the currency market at this level. So there is no breakout yet. There is no new highs, for the dollar to warrant, further purchases of the dollar. Okay. So for now, we can say that it is at its resistance. So we would expect some form of a correction or some profit taking. However, looking at the MACD, okay, we can say that, the trend is still actually upwards. Well, without a doubt. But let's check some other, the history of the peso dollar exchange rate vis-a-vis the MACD. Way back in about 2004, when the dollar was hitting 56 level, the sentiment at that time I would remember is that the peso is really, very weak. It is expected to be reaching about 60 pesos, or there was even a rumor that it could possibly reach 100 pesos because our economy was really in shambles. Okay. But if you look at the indicator at the time, okay, the MACD is not supportive of the dollar appreciation or the peso weakness, which means as the price has been increasing, the indicator has been going down. So similarly, I posted this particular chart from Bloomberg in mid of 2019 in my Facebook page, the Fast Exchange, wherein I was actually espousing, dollar sale even as early as November of 2018. I advised one of my clients to sell a huge part of their dollar holdings because I can see the same pattern of weakness in the MACD. So what does that mean? Okay. We call it the price divergence, okay, or an MACD versus price divergence. The price going up as the MACD is going down. It is diverging. What is the rationale behind this? Well, MACD, let's consider it as an indicator of either strength or weakness. Right now, the dollar is at its strongest if the MACD moves above the center line of zero. If it's below the zero, then it is weak. So going back to 2018, okay, when it reached about 54, okay, many people think that the dollar is actually, the peso is actually weak. Well, it is. It was indeed, weak. But how weak it was, will be further reinforced by the movement of the MACD. See, the MACD shows, it is slowing down. So which means if the dollar is getting strong, okay, let's use dollar, this is the point wherein it is at its strongest because the MACD was high. Okay, so if the dollar goes up further against the peso and the peso weakens, but then the MACD hesitates to go up, okay, then it goes to show that the strength of the dollar is not supported by the MACD. That is actually a divergence. And I have seen these divergences happening in the past. In 2015 in the index and the convergence on the 2016 of the index, these are reversal points. And mind you, about 80% to 90% of the time, this indicator, you know, is never wrong. So for now, though, the MACD is not showing that, okay, because it's still at its highest, but it is already stretched. So it is very possible that there is some sort of a correction that is going to happen in the coming weeks, for the MACD to temper a bit, because it's kind of um, running hot the past few weeks, and it's very difficult to sustain such a rally, as I have seen in the financial markets. So, however, if we're going to look at the daily chart, okay, as of last Friday, seeing the same pattern of a higher high for the dollar, but then the MACD doesn't follow. It is actually forming a divergence. So, and I'm telling you, ladies and gentlemen, this is an indicator that has an 80 to 90%, effectiveness, of telling you the highs and the lows of the market. So, although right now there is still no confirmation, of a crossover. So, a crossover will confirm that, okay, just like what happened during a high. And that could possibly start, for the peso to appreciate and the dollar to weaken, in the coming weeks. So if you want to learn technical analysis, I am inviting you to join my mentoring program, Trade with Me. Incidentally, I have a seminar coming up this September. So all you have to do is to check out the details on the Google form, bit.ly/TWM info, to know more about the details of the program. So, but then let's proceed, okay? More on technical analysis, I can see, a hesitation, okay, in the weekly chart because this week there was a high that was recorded, at about 57.35, but then, right away it moved lower and moved lower, than the Monday's opening price, so that resulted into a red candlestick with a tail, with a horn upwards. And in candlestick, this is called like a hangman, but it is not so clear to be a hangman. That would be a reversal pattern, but then depending on what will happen on the ensuing weeks. But nonetheless, this kind of formation is an indication of hesitation, such that, buyers are hesitant already to buy dollars above 57. And that also drove some previous dollar holders to sell some of their positions, which resulted to a red candlestick as shown on the weekly chart. Okay. So plus, of course, we are seeing the MACD to be quite at stretch. Okay. And it is but, high time for it to come down a little bit, to take a respite and then possibly make the necessary move, in the coming weeks or the coming months. If I were to forecast, what can happen to the peso dollar exchange rate, another way to do so is by putting a trend line. So there is a parallel support and resistance, and this is going to be the trend. Notice that it can actually reach 60 pesos up until next year. That is also possible. But then again, it has some room to actually move to about, 51 pesos, in terms of range. So it can actually move in this level over the next 6 months or 24 months, and that remains to be seen. Okay, but this is technical analysis. So if we're going to combine it with the fundamental analysis, this would be my take. Since interest rates still going to be on an upswing up until end of the year or even up to the first quarter of next year, because interest rates in the US has yet to come close even to the halfway point of the average of the inflation rate. So it goes to show that there is some room for interest rates to go up. So I would say that interest rates might be topping out up until middle of next year. And therefore, it is very possible that the US dollar, will be tapping out more or less, before or that or after middle of next year. Okay. So therefore, that could possibly be also the weakest point of the peso. And that could be, I believe as high as about 60 pesos considering the channel right now. So that provides some limited upside if you're going to buy dollars, today at about 57. Okay. And if I would suggest, if you're going to buy dollars, make sure that you are quick on the draw when it falls, below 56 or 55, because by going down below 55, okay, it has already broken the support level. Okay. So that means that it can actually continue to decline further to about 50, 51 pesos. Okay. So more than buying the dollars, you might want to consider selling the dollars whenever there would be some uptick, and then once it goes down, you buy it back again, maybe after 5% or 6%, and then playing on with the range. So for now, that is going to be my take on the peso dollar exchange rate. And let's see. Let's do another analysis maybe after 3 months or 6 months. So please like our Facebook page for some updates, the Fast Exchange, and subscribe to our YouTube channel, the Fast Exchange. Like and share as well. If you have some questions, you need some advice, you can write to me through email, rikiso@thefastexchange.com. Thank you very much and mabuhay kayong